Hello and welcome to another update video about Bitcoin. Yeah, Bitcoin's chart is still a bit in sell-off mode. That was not a surprise. If you watched yesterday's video, then you know about this. And before we really dive into the video here, quick announcement. You guys voted on X on the weekend for a coin for me to cover only on X, formerly Twitter. I did that. It's the e-gold chart. It's been uploaded yesterday to X. So if you're interested in an e-gold analysis, check it out. It was very popular, you guys. It looked like Jupiter was winning, but then I mentioned that poll in one of the last videos, and you guys just jumped in and voted for e-gold. Unfortunately, not the most positive chart, I have to say. Another thing to mention is in the coming week, I will, first time ever, provide or run an educational public live stream for Elliott Wave and how to understand the altcoin sector from an Elliott Wave point of view, more from a technical side, how to use indicators, more like a good overview to provide an educational foundation for everybody who's watching those videos. You can, of course, watch the recording, but if you're interested in that, it will be a public live stream. Then make sure that you follow us here on X, because I will announce it here. Sometimes on YouTube, because of the amount of videos we publish in content, things might get lost. So I will probably mention it in some of the future videos, but make sure that you follow us here, because you will be able to see the post with the announcement and the live stream link. It will happen in the coming week. So let's take a look at the Bitcoin daily time frame then. Here we can identify a sideways consolidation still above our support area. The support area is unchanged, so still between 69,000 and 91,290. And yeah, in this area here, we can see that the price is still holding very well overall. Yeah, we're still ranging. We have not broken below any key support. Key support is around 69,000. And, you know, as long as we're holding above 69,000, I explained that yesterday, the overall bullish thesis is intact. Of course, that's a problem, because 69K is quite far away. It is quite far away, isn't it? So because it is so far away, there's obviously a risk. You know, the risk is quite high. Now, good news is on the smaller time frame, we're tracking support levels that are a little bit closer to the price, that are quite close to the price. And so there is a good chance that we get early signals if something more bearish is playing out. The first idea, you know, if certain levels break, especially on the smaller time frame, then it would most likely be a larger wave 4. But if that level breaks, I think it's 92,600. We're going to double check that in a minute. If that level breaks, then it becomes already more probable that a major top has formed. Very much possible. Okay, but it will not be confirmed until the price breaks below 69K. That's important. So first of all, I would track a larger wave 4, but because we always need a bearish alternative, that would be our, let's say, bearish alternative. So what we're going to watch for is ideally a reaction before the price breaks below that 92,600 and for the price to start the C wave up. If the market doesn't want to make it that easy for us, then we could easily revisit the area here that's on the chart. Shouldn't be a surprise. 82K, 75K. Again, not expected at the moment, but the market will decide. We just have to adjust. You know, we're not making the market here. But overall, I can say the Elliott Wave structures here look really good on this chart. It's been a really healthy fifth wave to the upside that formed from the August low. But now where it's getting messy is obviously like the last move of the last move. So if you followed previous videos, then you know we are pretty much watching, or we pretty much see this as kind of the last move. The last move of this cycle. So that's definitely something interesting to think about. Risk is overall high. I don't want to get people get caught out by a large correction. So I've been warning for a few months, basically from when we entered this area, that we are very, very close to a major top. And that means that needs to be reflected in your risk management approach. So now let's take a look at the smaller time frame. Before we take a look at the smaller time frame, if you guys speak Spanish, if you're a Spanish speaker and you struggle to understand the English videos, feel free to check out our Spanish Espanol channel. You can find it in the video description. It's linked. There are not as many videos there, but there is content. It will be growing. It will grow further. You can participate as one of the first subscribers on our Spanish channel. MCO is not without reason called MCO Global, so the Spanish market is definitely a very interesting market, also from an analysis point of view, and there will be more content geared towards Spanish-speaking audiences. But yeah, I know that some of you are in South America, some of you are in Spain, so if you're interested in joining this Spanish-speaking community, feel free to check it out. Link is in the video description. So let's take a look at the shorter time frame. Here, you can identify, or we can identify a corrective pullback, right, into the support region. The support region is located between 92,665 and 99,235. And the C wave to the downside, we talked about that yesterday. It's reached that blue target area I mentioned in the last video, right? So in the last video, we put this blue Fibonacci extension zone onto the chart. The price has shown a first reaction. Now, of course, this is far too small. I leave it kind of open if the low is in already. I assume it's not in yet, but we are basically in the target area. I mean, I shouldn't say I assume it's not in yet. The thing is, I haven't got any evidence it is in, other than a small reaction to the area where the price was supposed to react to. Okay, so quick reminder, this is the area that, if broken, will indicate that, and let's go back to the daily chart, if it's broken, will indicate that this fourth wave is likely still unfolding. Again, not expected at the moment, but you know, this is what could play out if the price breaks below 92,665. Therefore, it's so crucial that this area holds. Okay, I'm not so worried about really like the smallest micro support levels or anything, but 92,665 is important, needs to hold. And yeah, in the meantime, we observe reactions here to these Fibonacci levels. These Fibonacci levels are essentially mathematical representations of market sentiment. And these are some of the things I'm going to discuss in that educational live stream. And depending on how successful it is, you know, we might do it again and again. But this is sort of just where prices should react if the wave count is correct and if the market sentiment is behaving the same way as we expect it to be behaving, right? So that's essentially what these represent. They're not magical levels or anything, or doesn't have anything to do with a crystal ball, even though it sometimes seems like that when there's a reaction exactly to one of these target levels. But this is more like, to be understood, like a zone, a level or an area of interest where the price could react and generate a reaction to the upside, right? Especially here, 102,000 is, as I said, the nearest resistance level. And we have a corrective price channel here. And a break above that corrective price channel could indicate that we're on our way higher towards 120, 130K, which could be the last rally in this cycle. So at the moment, it's all about watching now specifically how the price reacts. I know a lot of people are getting bearish now. And I mean, don't get me wrong, altcoins are high-risk assets. That's one thing. So they all have their support areas. If they break, we might already have cyclical tops in place, but then you always get the levels for risk management. But overall, when many people get bearish, this is typically when a new rally starts. Okay, so we're definitely watching this area again. And again, this is the area from where a rally started last time in January, end of January. So the market might try it again. Okay, we're now in this area of that previous swing low. Maybe we'll get another low below that. Not necessary. So that's the update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.